Are you prepared for some thrilling earnings forecasts for Tesla for the first quarter of 2023? Tesla built almost 440,000 automobiles and remarkably delivered nearly 423,000 of them. Still, it remains to be seen if their first quarter results would exceed predictions. We'll make that exact prediction in this video. We'll examine Tesla's forecasted stock price chart, project their sales, earnings, and net income, and even talk about the implications for Tesla's stock price. So grab a seat, press the like button, and let's get going. In the first quarter of 2023, Tesla delivered about 423,000 vehicles, exceeding estimates. Even though there are 10,000 less cars than anticipated, this is still a remarkable accomplishment. Furthermore, despite producing over 440,000 vehicles, just 1,000 more than in the previous quarter, the Model 3's two-week shutdown is to blame for this. Production levels would have been exceptional, coming close to 470,000, if not for that. We'll make a prediction about Tesla's Q1 earnings in this video. The question now is whether the company will beat forecasts. This is the quarterly forecast chart for the price of Tesla shares. Vehicle deliveries are displayed in the first. FSD receives a one-time payment of $15,000 per quarter. Depending on availability and demand, they'll probably raise it to $17,000 by the end of this year. I chose a conversion rate of 15, which indicates that 15% of Tesla purchasers will choose to pay the FSD upfront. The average selling price of each car is $50,000 in Q1, $49,000 in Q2, $50,000 again in Q3, and $51,000 in Q4 when the Cybertruck, which will cost up to $55,000 per vehicle, is included. The FSD profit margin is between 4% and 5%, in fact, 4%. The credits are projected to be $400 million in Q1, $350 million in Q2, $300 million in Q3, and $250 million in Q4. Profits and operating margins per vehicle are also taken into account. Energy is another thing I've included because it's starting to play a role in stock price in 2022. It will generate about $4 billion in revenue overall, and in Q1, it will generate nearly $300 million in profits. Based on my prediction, they will generate approximately $2.2 billion in sales by the end of Q4, up $200 million from the previous quarter. Over the course of the 4 quarters, the projected profits are 12%. That FX exchange expense for $350, $350, $350, $375, and $375 is something I would like to add. The cost of converting yuan to US dollars is high, which will increase this quarter's expenses. We will have a complete fiscal year if we combine this with the previous 3 quarters. By using a suitable PE, we can determine the correct stock price for the following quarters. It is important to note that the share standing is reduced by 1% annually, 4% annually, and 1% quarterly. Now let's project Q1 earnings and revenue. To estimate revenue, we can add the 423,000 vehicle deliveries to Q1. Press the like button when you're ready. With a 14% operating margin, the automotive revenue exceeds $21 billion in total. Tesla's Q1 2023 revenue is over $24 billion if we include their earnings and energy income in addition. To FSD revenue, we can remember that the net income is $3.6 billion or earnings per share. The street predicts an EPS of 85 cents, while the quarterly EPS will be $1.13. Where they're getting 85 cents from is beyond me. It is not 85 cents, even if we lower the op margin to 10%. Because they just announced more layoffs, I placed it at 13.5% in Q2 and 14% in Q3. Even in this peculiar environment where we're in a recession, the profit margin will still be larger than 9.7% in spite of the price reductions. It's time to start planning for the upcoming quarter as we close out the current one. My estimates for the second quarter are somewhat cautious. Based on my estimation, Tesla is expected to produce 444,000 vehicles at a margin of 13%, generating about $25 billion in sales. Nevertheless, the net income will be less than $3.6 billion due to the lower operating margins. This translates to an earnings per share EPS of $1.12 for the quarter and $4.40 for the previous 3 quarters. In my forecast for Q3, Tesla should supply 465,000 cars, but I believe they might deliver closer to 480,000. I'm exercising caution. With a net income of slightly over $3.8 billion, this will generate over $6.5 billion in sales. The earnings per share EPS for the quarter will be 17 cents, and the EPS for the entire year will be $4.52. Going forward, I project that Tesla will produce an astounding 490,000 automobiles in Q4. Although I believe they can deliver even more, I want to be cautious and careful. With a net income of more than $4.5 billion, this will generate close to $8.6 billion in sales. There will be a $1.26 EPS for the quarter and a $4.62 EPS for the entire year, even while earnings have only increased by 16% to 18% over the previous year. There has been a roughly 39% increase in the number of. Let's now discuss the implications of this for the price of Tesla's shares. The stock is currently trading between $180 and $190 per share, but given the recent price reductions in market fear, it could drop even lower. On the other hand, if Q1's P ratio is 50, the stock price might be $201 per share. In the event that they underperform on EPS estimates and the PE falls to 45 or even 40, the stock price may reach $161 or $121 a share. The price of the company could plummet as low as $101 per share if the market turns bearish and the PE falls to 30. Though it's unlikely to move much higher in the current market climate, the PE might rise back up to 55 or even 60 if Tesla surprises the stock market with an EPS of $1.13. All things considered, I will continue to adhere to the cautious estimate of a 50 PE ratio. As we enter Q2, it is evident that Tesla's stock price is marginally lower than it was in Q1, which may portend bad news soon. It appears that Tesla failed to outperform its Q1 profits, and investors are now fearing that the price would go as low as $45 or $40. Nevertheless, if we examine the P ratios, we can observe that it was roughly 161 in Q1 and improved to 176 in Q2. This development implies that the business has solid foundations, and it's likely that the stock will strengthen as well. For Q2, I want to maintain the P at a base of 50, resulting in an average stock price of $226 per share. Going on to Q3, I think the stock price will keep rising, and I'll assign it a P of 50, which ought to translate into an average share price of $226. On the other hand, if you're feeling positive, you might anticipate a P of 60 and a $271 stock price. If you're pessimistic, on the other hand, you should anticipate a P of 40 or even 45, which would translate into a stock price of about $180 per share. By the time Q4 earnings are released, which I believe will be between January 21st and April 20th, 2024, the market will be in a bull market. A P of 60 would mean that the stock price would be $277 a share, which is what I anticipate happening. I'll give it a P of 50 just to be safe, which will mean an average stock price of $231 per share. I think these are reasonable price ranges for the end of 2023, albeit they are not guarantees. Personally, I'll purchase further shares if the stock price falls below $200. However, in order to diversify my investments, I will completely cease buying if it rises above $300. I think it's important to diversify your investments. And since I'm saving for a house, I can't put all of my eggs in one basket. I think this current decline in Tesla stock prices represents a good time to invest. While I am unable to forecast the near future, I think Tesla's stock will continue to climb in the long run. I may look back in 5 or 10 years and wonder why I didn't purchase more shares when the stock was still below the 1 trillion mark. Naturally, this is just my viewpoint, and I might be off. Stock may not rise at all, or it may fall even farther. But I believe in Elon Musk and the Tesla group. Their goal is to expedite the global shift towards sustainable energy, and they are committed to seeing this through to completion. To take things a step further, they intend to construct a gigafactory in Mexico for the new tiny automobile. They will next construct comparable plants in other regions of the world, eventually exceeding Toyota in the number of vehicles delivered globally. Naturally, purchasing a Tesla may not be the ideal option if you need the money within the next year or two. The stock is erratic, prone to swings similar to an elephant's trunk. It's critical to conduct independent research and exercise caution when interpreting financial advice. This closes the video, and a large like would be very appreciated. Just by becoming a subscriber to my channel, you can help us out as well. I appreciate everything, and I'll see you in the upcoming video.